Art, love to get your assessment of what the bulls have put together past 48 hours.
Well, it's been a couple of things, Carl, and you got to go back a little bit further than that. I think a key was last Thursday when we got a kind of flush-out reverse rally. In the morning, we went into near free fall, and when the heavy selling began to shrink a little bit, suddenly the short covering came in, and that kind of setup can be pretty good. And I think it's, even though we've had whipsaw trading since then, it opens up some possibilities. Now, you recall 2 weeks ago, we had a strong Monday, Tuesday, not unlike what we've seen yesterday and today. It's important that we hold on. We shouldn't let this rally fade in the next 2 days. So I think if we can last for a couple of more days, we may be seeing not the turning point, but an important turning point. I was thinking the market was going to take more toward the end of October to get a bit of a reversal, but we may have started early, not unlike Bertha snowstorms, and we'll see if we can hold on. I think the key is, I think this is a bounce in the bear market, but it could last a couple of weeks, and that's what we've got to watch for.
Yeah. Short rates are still higher. 10-year still knocking on the door of 4. How much of that needs to change if this is going to last? Well,
I think it's going to be helpful. I think there's some chart resistance, and cocktail napkin chartist that I am, in the 10-year up above 4%. I think the markets, interestingly, are beginning to watch the 2-year a little more critically than the 10-year, and that is because they're taking that as a signal of interpretation of what the Fed may do. So that has been somewhat beneficial. I think one of the key things that we've seen over the last week was this reversal in London of the tax policy. And while the Bank of England said we're not going to come in and buy bonds in a rescue anymore, what they have admitted to, at least by their action, is that they're not selling any bonds. So they seem to be postponing their quantitative tightening. And we've had a couple of potential black swans out there. Bonds in Japan are trading by appointment. I mean, their 10-year didn't trade for 3 days last week. And the story is that the Bank of Japan may own as much as 70% of their 10-year bonds. So we've got some black swans still out there. Keep your eye on the dollar. It's weakening a little bit. Strength in the dollar is often a sign of concern that something's going to fall apart around the world, that we're going to get a black swan, and people try to pick up with it.